Welcome to The Explainer. You know the drill. We take really complex topics and make them simple. All right, today we're tearing into a fascinating analyst report. It's basically a roadmap for 2026, and it starts with the one question that's on everybody's mind right now.
So here's how we're going to break it down. We'll start with the report's core ideas, look at how they explain today's news, and then get into the big predictions for AI and the global markets.
Okay, let's get right into it. Before we can even talk about predictions, we have to understand the tools the analyst is using. And it's a really unique mix of some powerful economic theories.
First up is a concept called swarm stupidity from Gunter Duke. It sounds kind of funny, but it's a super important idea. Basically, it explains how a bunch of smart, rational people, or companies, can end up making a collectively irrational decision, like, say, everyone piling into an AI trend just because everyone else is.
Next, they pull in the principle of sound money. Now, this is an idea that argues true economic stability comes from money with a limited supply. Think gold or even Bitcoin, not the stuff governments can just print more of. It's a key piece of the puzzle here.
And the third piece is something called socionomics. The big idea here is that the collective mood of society, whether we're all feeling optimistic or pessimistic, is actually a powerful predictor of where the market is going. It's not about the news, it's about the vibe.
Okay, so we have these three big theories. But here's where it gets really cool. The report uses this toolkit to decode what's happening in the headlines right now. So let's start with a huge piece of news from the tech world, something that has everyone talking. So how does the report see this? Well, it's a perfect example of swarm stupidity in action. Think about it. While all these companies are rushing to adopt AI, and maybe not all of them will succeed, the ones selling the tools, the infrastructure providers like SK Hynix, they're the ones guaranteed to make a fortune. They're selling the picks and shovels in the gold rush. All right, now let's pivot to something that seems totally unrelated. We're talking about the world of stablecoins. And this is where sound money theory comes crashing in. You've got a digital currency company literally buying tons of physical gold. Why? Because they're hedging their bets. They're using a classic sound money asset to backstop themselves against the instability of regular government-issued currencies. It's a huge signal. So all of this brings us to the absolute heart of the report, the big question. Is all this AI hype a real sustainable boom, or are we just watching a massive bubble inflate? And here's the report's big insight. It says you can't just talk about the AI market. You have to split it in two. First, you've got the infrastructure players, the enablers. Think NVIDIA, SK Hynix. They're building the foundation, and the demand for what they sell is absolutely real. But then you have the application layer, all the companies using AI. And for them, well, profitability is a huge question mark, and that's where the bubble risk is. This timeline just lays it all out perfectly. The report predicts 2026 will be a year of two halves. For the first 6 months, it's all optimism. AI infrastructure stocks are soaring on real, sold-out orders. But then, come the second half of the year, the market starts to get skeptical. It begins to separate the real winners from the hopefuls. This is what the report calls the Great AI Decoupling. All right, so if that's what's happening in AI, how does it ripple out across the rest of the world? Let's zoom out to the global market forecast. So for the US, the report is actually pretty bullish. It's calling for the S&P 500 to hit close to 7,000. And the main driver it points to is a potential policy called Trump accounts, which would basically create a new, steady stream of investment flowing into the market. But as bullish as that sounds for the US, the report saves its most aggressive forecast for a totally different market. It says this is where the strongest momentum on the entire planet is. And that market is South Korea. The prediction here is huge. We're talking about the Kospi index not just hitting a new high, but blowing past 5,000. What's fueling this? Two things. The semiconductor supercycle, thanks to AI, and some big corporate governance reforms that are making the market way more attractive to investors. And what about commodities? Well, that sound money trend we talked about goes into hyperdrive. The report sees central banks and other big players continuing to buy up gold, pushing the price to levels we've never seen before, over $5,200 an ounce. So with all these moving parts, what's the game plan? How do you actually navigate a year like 2026? Well, the report boils it all down to one winning formula. It really comes down to three unstoppable megatrends for 2026. First, the explosive growth of AI infrastructure. We're talking the NVIDIAs and SK Hynixes of the world. Second, the big return to sound money, like gold and Bitcoin. And third, a major expansion of what they call shareholder capitalism in places like the US and Korea.
And this table just lays it all out in black and white. You can see the bullish targets for the S&P 500, that very bullish call on the Kospi, and the reminder to be selective in AI, focusing on infrastructure. And of course, the steady rise predicted for gold and Bitcoin as that sound money theme plays out. So let's circle all the way back to our first question, AI boom or tech bubble? The report's answer, pretty brilliantly, is it's both. The boom is real, but it's happening in the infrastructure layer, the companies selling the picks and shovels. The bubble? That's forming in the application layer, with all the companies that still need to prove they can actually make money from AI. And 2026 is pegged as the year of the great decoupling, when the market finally separates the two. So the report gives us a really clear map. And it leaves us with one final thought. In a world changing this fast, which one of these megatrends are you going to be watching?